Saugata Gupta, who's the MD and CEO of Marico, joins us now for a check on the demand and how FY23 could shape up. Mr. Gupta, thanks a lot for joining in. Can you start by giving us a sense about the demand in the second quarter? You expected it to be in the positive zone as far as volumes are concerned in Q2. But tell us, what is your outlook on margins as well?
See, I think as far as the inflationary situation is concerned, I think the worst is over. Because I think we had peak inflation in Q1. So therefore, we believe that things are improving, although crude is still at a high compared to last year, although it has softened. And therefore, we have been able to pass on value to the consumers, and we see that there has been a change in volume, and we expect, obviously, the volumes to be positive this quarter. Now, having said that, I think as far as profitability is concerned and the margins, we see that happening in the sector mostly in the second half, because in this quarter, although there has been a decrease in a lot of input costs, as you know, all of us hold stuff. We also pass on the benefit immediately to the consumer in certain ways, in certain channels. Therefore, that impact on margins in the sector will start happening definitely in the second half. And also, I think the second half, there is a lower base. So I think there will be a progressive improvement as far as the sector is concerned.
Okay, Saugata, good morning. But could you give us some numbers, the kind of volume growth that you'll see in Q2?
You look at it this way, I think it's still 30 days to go, and it's very difficult to talk about it. I think what I can assure you is that we believe that it will be in the positive territory as things stand now.
And what about margin specifics? Will they be stable as you're aiming for 18 to 19% this year? Your thoughts on how margins have panned out so far?
So I think let us not get into specifically to a quarter, but what we believe that that 18 to 19% margin over the full year, I think, is very much possible if the current trends are continue. Unless there is some other volatility that happens in the second half, I think it should be possible, 18 to 19% margin.
Okay. What have been the price cuts in products like Saffola, and how's that part of your portfolio doing now?
We have taken significant price cuts in Saffola, and I think in line with the edible oil price table. As you know that I think Saffola obviously got impacted because of the absolute price difference and the absolute put down price, which had gone significantly higher. And as we have taken pricing action, we are seeing the volumes recovering.
Okay, and in terms of rural versus urban, how's the rural demand been? Is it still slow? And what's the outlook on urban?
I think we continue to see recovery in the discretionary part and the urban, and including male grooming, serums, or whether in some of the digital brands. I think the consumption story is very much intact. As far as rural is concerned, I think we are. I think we expect to see gradual recovery. Having said that, I think the worst is over a little bit, because as you know that what happens is that as food inflation gets under control at the bottom of pyramid, the downgradation, or the both downgrading and downtrading that was happening in FMCG, that instances will keep on reducing. And we believe that therefore that gradual recovery will happen.
Mr. Gupta, just stay with us, sir. I just want to take quick note of the markets, which are, down significantly. We are down 28, 29 points now. So this is a turn for the worse. 17,515 is where the index is at now. And, sharp correction. So we've been trading for, not even 30 minutes. But from the high of the day, which was made at about 9:18, and the high was 17,643, we've sold off almost 150 points, 140 points or so. 17,522 is what we have seen on the index so far. So this is quite a turn that we are starting to see. Let's just look at the mid-cap and small-cap part of the market. That's still holding on, although that is also dropped off significantly from the opening highs. I'm looking at the mid-cap and the small-cap. I think experience is similar. It's blinking red and green, but it's off the highs. That much is absolutely for sure. All right, that's a quick detour just to kind of sort of look at the markets. Thanks for waiting, Mr. Gupta. Could you tell us how has the B2C segment panned out for you in the post-pandemic world? What are your plans for growth in digital brands?
We continue to track well on D2C, and since we have currently a bouquet of brands, obviously there are a lot of synergies, and in terms of learning, synergies in terms of cost is available. Also, I believe in this space, the madness that was there in terms of the kind of cash burn and the availability of capital, there is much more sanity here right now. And therefore, I think that will actually help the stronger brands.
Okay, so what are the spaces that you're looking at? I'm asking you from an acquisition standpoint. What can we expect?
I think we continue to look at acquisitions. We believe that we now have a very good working model for a lot of brands who want to scale up with our help. And it has been a reasonably successful model, and it's unique to traditional FMCG companies. And therefore, I believe that we continue to look for acquisitions. Having said that, I think there is enough juice in terms of headroom for growth even in the brands which we currently have.
Okay, are you facing any specific challenges in the food business, or is that doing well?
I think food is continuing to do well. Obviously, last quarter, as you know, there was a very high base of in-home consumption. Our entire portfolio, unlike a lot of companies, was completely based on in-home consumption and immunity. Both had a very high base. We didn't have an out-of-home, we didn't have indulgence. So there was a high base, and there was a little slowing down in the sense that there was a single-digit growth. But we are seeing again back into that momentum, and we are extremely confident of achieving our aspiration of the 850-2,000 crore, which we are gunning for in the next 1 year.
So, I mean, to take that forward, by when do you get to the 20,000 crore rupee top line?
It's the way I look at it is we have to continue to grow in the top quartile. India we are very, very lucky to and privileged that our home country is a very strong invest to grow story. It's not a saturated market in terms of penetration. There's significant headroom for growth in terms of the unbranded to branded story, especially in foods. There are a lot of opportunities in personal care. So, and also we are an emerging market FMCG company, and most of the markets where we are present in, there is significant headroom for growth. So we strive to continue to grow double digits every year in terms of top line. Obviously, there are years where there is high inflation, there are years there is deflation, there could be years like that. And I think, as I said, that the organization is also undergoing a significant diversification journey in terms of the portfolio by whether it's in India with food and digital and premium personal care, there will be a sizable business in the next 2 years. We also have a very, very stable and a consistent international business, which is profitable. And therefore, I'm pretty optimistic that we will be continuing to deliver top quartile results year after year. And that is the aspiration. And for that, I think, obviously, we have to continue to strive to do that.
Okay, Saugata, thanks a lot for joining us. That's Marico.